Bitcoin was considered nothing more than an interesting phenomenon when it first came out in 2009. Technicians and futurists could see the future potential of cryptocurrency in general, but it wasn't drawing much interest as an investment. Many didn't know how to invest in cryptocurrency and what really is its potential. But as the years have passed and hundreds of more cryptocurrencies have come and gone, Bitcoin has emerged as the standard bearer of the currency. This point hasn't been missed by investors and speculators. Some are now coming to see cryptocurrency as an alternative global currency that will eventually replace sovereign currencies such as the US dollar and the euro. But the trading activity has also drawn a large number of speculators. They're betting on cryptocurrencies, Bitcoin trading in particular, rocketing all the way to the moon. Speculators are rarely seriously concerned with fundamentals. They see a sudden and dramatic price rise, and whatever the asset, it draws their attention. This article isn't meant to be an endorsement of Bitcoin or any other cryptocurrency. Instead, it's a general guide for anyone who wants to start investing in cryptocurrency. It is entirely possible cryptocurrencies will continue their march forward over the next few years. And if you're betting on that outcome, we hope this information will help. What are cryptocurrencies and how do they work? Cryptocurrency is based on blockchain technology. That's a chain of information registration and distribution that is not controlled by any single institution. Instead, it works as a record of digital transactions that are independent of central banks. There are all kinds of technical details related to blockchain technology that may be worth investigating if it doesn't drive you into a technological coma. But essentially, it eliminates the middleman, such as a bank, and allows buyers and sellers to transact business directly between each other. That should also serve to lower or even eliminate transaction fees, which is a major part of the attraction of cryptocurrency. The most popular cryptocurrency is Bitcoin, whose price is regularly tracked in the major financial media questioning "Should you invest in Bitcoin?" But there are actually hundreds of cryptocurrencies, including many that have already come and gone. What are the main attractions of cryptocurrency? What you need to invest in cryptocurrency at the moment? It seems as if the two primary attractions of cryptocurrency are: you can own and use it anonymously, and it's subject to price explosions that can make it look and feel like an investment. And for those who bought cryptocurrency prior to the price explosion in 2017 or the most recent price increase in 2021, it's probably been the best investment in a lot of portfolios. So what should you do if you want to get in on the cryptocurrency action? How to invest in cryptocurrency, step-by-step guide. As you might imagine, you can't go to a local bank or even a brokerage firm, there is one exception we'll discuss later, and buy cryptocurrency. It's still seen as something exotic in the world of financial institutions. Since it's not well understood and is virtually unregulated, most financial institutions don't want to deal with it. For that reason, it tends to function within its own network. Read our tips if you want to start investing in cryptocurrencies. 1. Allocate only a small percentage of your portfolio to cryptocurrencies. Cryptocurrency investment portfolios. You'll have to decide in advance how much of your portfolio you want to allocate to cryptocurrency. With recent advances, particularly in the price of Bitcoin, it can be difficult to make a rational decision. All investing is ruled by a combination of greed and fear, and it may be hard to keep the greed part under control given the advances cryptos have shown in recent years. No matter what, cryptocurrency should occupy only a very small part of your portfolio. Exactly how much is completely up to you. But you should be wary of investing more than 10% or even 5%. Understand that cryptocurrency isn't an investment in the same way a stock is. Much like investing in gold and silver, it doesn't pay interest or dividends. To the degree that cryptocurrency will be a good investment all depends entirely upon its price increasing significantly, and staying there for a while. Cryptocurrencies weren't designed to be investments. They are mediums of exchange. They've widely been seen as an alternative to sovereign currencies, like the dollar, yen and euro. It's been thought that they'll ultimately represent a more efficient means of commerce, particularly on the web. That's because its value is determined strictly by the market and not by manipulation as sovereign currencies tend to be. But at least up to this point, cryptocurrencies haven't satisfactorily filled the role of being a medium of exchange. Only a very limited number of merchants accept them, so most trading is taking place between individuals. Up to this point, both the current uses and the future of cryptocurrencies are uncertain. 2. Choose your cryptocurrency. How to know which cryptocurrency to invest. This is one of the real complications of cryptocurrency. There isn't just one, but hundreds. Maybe even more than 1,000. Complicating the issue is that more are coming online all the time. That has to be counterbalanced by the reality that hundreds of cryptocurrencies have come and gone already. And the whole concept of cryptocurrency started only about a decade ago. Bitcoin is the most dominant cryptocurrency for July 2021 right now. The largest cryptocurrency is Bitcoin. It's also the crypto that's drawing the most attention and investment dollars. In a very distant second position is Ethereum, and there are others like Zcash, Dash, and Ripple. Given its dominant position, Bitcoin seems to be the most reliable among all the many cryptocurrencies available. In fact, Bitcoin has become practically synonymous with cryptocurrency. What's interesting about the connection is that while the media has been carefully following the price action of Bitcoin, some cryptocurrencies have performed even better. Because of the dominant position of Bitcoin, your cryptocurrency position should be mainly in this crypto. Other cryptocurrencies should occupy a much smaller position in your portfolio. And if Bitcoin as the bellwether of cryptocurrency is speculation, any other cryptocurrency you hold should be seen as even more speculative. This assumption should not be underestimated. Most of the cryptocurrencies that have come on the market in the past decade have either flatlined or disappeared completely. That means any investment you make could go all the way to zero. And given the price volatility that's common with cryptocurrencies, your investment could disappear completely with very little notice. This makes the traders constantly looking for the next big thing. One example is NFTs, read about it here. 3. Choose a platform to buy cryptocurrencies. Choose the right crypto investing exchange. One of the disadvantages of buying cryptocurrencies is that you can't get them in all the usual financial places. Banks don't offer them, and neither do investment brokerage firms. For the most part, you'll be limited to buying, holding, and selling cryptocurrencies on dedicated cryptocurrency exchanges. Some of the largest of these exchanges include eToro. eToro is one of the most advanced crypto investment platforms. It offers unique investment options like its copy trader technology. With this feature, you can copy the more successful crypto traders' investment strategies on the platform. It also offers copy portfolios, which are something like crypto robo-advisors, providing professional portfolio management. And to help you learn the ropes of investing in Bitcoin, it offers virtual portfolios where you can trade up to $100,000 in a paper account without risking any of your own money. Coinbase. Coinbase started in 2012 with the radical idea that anyone, anywhere, should be able to easily and securely send and receive Bitcoin. Today, Coinbase offers a trusted and easy-to-use platform for accessing the broader crypto economy. Gemini. Besides trading cryptocurrencies, Gemini allows users to store crypto in a digital wallet. They also offer extensive crypto research and tools. And you can earn up to 7.4% APY interest on select cryptocurrencies just for holding them in your Gemini account. Unify Money. With Unify Money you can keep your banking, investing, and finances all in one place. And you can even trade and store 33 cryptos through their partner crypto exchange Gemini. If you're tired of having a different app for every trading platform and banking service you use, then Unify Money is worth looking into. You can think of these platforms as brokerage firms specifically designed for cryptocurrencies. Each offers trading in the most popular cryptos, and of course, you should expect to pay a fee for both buying and selling. 4. Store your cryptocurrency. Crypto wallet. Cryptocurrency is typically stored in a cryptocurrency wallet, which can be either a hot or cold wallet. This is a complicated topic, particularly since there are so many wallets available. But we'll try to boil it down to the basic facts. A cryptocurrency wallet is a software program that stores the private and public keys that connect you to the blockchain where your cryptocurrency exists. Wallets don't actually store your cryptocurrency but enable you to access it on the blockchain with your public key, your cryptocurrency address, that the other party in the transaction sees, and private key, known only to you. You must have both in order to complete a transaction. They're called keys, because they're used to unlock your cryptocurrency on the blockchain. In addition to enabling you to access, send and receive cryptocurrency, a digital wallet also provides a record of transactions that are stored on the blockchain, as well as your current balance. Types of cryptocurrency wallets. There are several different types of digital wallets. Desktop wallets are installed on your personal computer. Since storage is on your own computer, the information is safer than with online wallets. Online wallets are on the cloud and can be accessed from any computer. They're more convenient to use, but your private key is stored online and controlled by a third party. This makes them less secure. Mobile wallets. As the name implies, this type of wallet is an app on your smart device. They have the advantage of being able to be used to make purchases where various cryptocurrencies are accepted. Hardware wallets. These stores your private key on a hardware device, such as a USB device. They're more secure because the private key isn't stored online, where it could be accessed by unauthorized parties. They also let you access your cryptocurrency from multiple devices. Which digital wallet you choose will depend on your own desire for a balance between security and convenience. Some cryptocurrency exchanges also offer digital wallets for your cryptos. You can also use software to track your cryptocurrency just as you would other types of investments. For example, with Personal Capital's cryptocurrency beta, you can input the amount of crypto you own, and track it alongside the other assets in your portfolio. 5. Secure your cryptocurrency. Keeping your crypto secured after you buy it is very important. This is especially true if you decide to use your cryptocurrency to buy products or if you have a hot wallet. Basically, anytime you use crypto online, you need to make sure your investment is secure. That's why we recommend using a VPN like NordVPN to make sure your online transactions are secured and encrypted. When you use a VPN, virtual private network, your online connection is secured. Having your data encrypted means that no one can see any of your online transactions. It's an extra layer of protection that ensures both your data and your crypto purchases are completely anonymous. It makes it harder for others to hack into your accounts, especially for users who own a lot of crypto. ExpressVPN is another VPN that can help secure your accounts and add an extra layer of protection. Be ready for a wild ride. Bitcoin has had a lot of ups and downs over the years. This chart from CoinDesk shows the price performance of Bitcoin from 2013 to the present. Click on All at the top of the chart. At the beginning of the chart back in 2013, Bitcoin was trading below $130. But it skyrocketed to $17,060.55 on December 11, 2017, before crashing again a few months later. In 2021, it started to jump again, getting close to $64,000 on April 14, 2021. As of writing, the Bitcoin price is very volatile, and currently around $33,000. No matter where or how you decide to buy, sell and store your cryptocurrency, be prepared for instability. Cryptocurrencies are far less predictable than traditional investments. And with any investment, it's key to remember that what goes up can come down again.